Christine Lagarde mentioned the question of the international monetary system. No, she mentioned can. Now, of course, the French are very theatrical, but of course, if you'd really wanted to put on a conference which would rival Bretton Woods, you wouldn't choose can, because it doesn't sound good. You can't say, well, we've invented the can system. It sounds like something out of the Can-Can Club or something like that. You'd choose somewhere like Montpellier. So I don't think that this is going to rival Bretton Woods, but do you take it seriously, what President Sarkozy, in a very, I think, intellectually and politically honest way, he's saying that this huge imbalance between the dollar still making up such a large percentage of world reserves, it just cannot be sustainable. The euro is there as well as number two. He wants to reform the system. The Chinese say they want to reform the system. Is the system reformable?
The position of our newspaper, which of course must be correct, is that Mr. Sarkozy, despite the eloquent presentation of his ideas by Christine Lagarde, is wasting his time. And since this is a panel session, one has to be a little bit honest about these things. But at the very least, let's start up by defining what the problem is. One view of the problem is that, unfortunately, the world, for some reason that nobody fully understands, continues to hold far more dollars than is reasonable. You're right, reserved about 2/3, something like that. Depends on the value of the dollar. It's surely well below that at the moment. Is held in dollars, and only, I think, 25% in euros, and that leaves you with about 10% or so with other currencies, of which the yen is the most important. And that seems rather anomalous because the Eurozone and the US are roughly the same size. Now, this really is a market decision. And the market, of course, is governments. The governments are the buyers, but they are making an assessment of what they think is going to be the most reliable asset for the future. And they're looking both at the likely durability of the currency and the sorts of assets that they can purchase and how attractive they are. It's pretty obvious, I think, that in terms of both durability of the entity and the range and liquidity, the depth and liquidity of the market, and its historic benefit, the advantage of incumbency, the dollar has an enormous advantage. So it's just going to take. There's a very good book by Barry Eichengreen out just on this. There will be a shift if the euro survives, which I expect it to do, of course, but it will probably take 20, 30 years, and it really doesn't matter. This is not a giant world issue, although it is, of course, a noble cause for the French government, and it will continue to be in many incarnations over the years. Interestingly, I think I have a strong impression that other important countries in Europe don't really want this to happen very much at all because they fear the consequences for the strength of the euro. I'm not at all sure that Germany really wants the euro to become as important as the dollar. It creates some big problems in terms of value. That's one issue. There's a completely different issue, which is, I think, the core issue, which is the monetary system is ultimately a mechanism of adjustment. That's really what economists are interested in. And here we have two monetary systems operating side by side. And that's really what I was talking about. We have a floating rate system among the developed countries, and we have a fixed rate system between very important developing countries, quasi-fixed, and the core country, the dollar. And that creates all the adjustment process. All the adjustment process is shifted onto floating rate countries. And that's what this whole instability problem is. Now, that is a genuine problem. Unfortunately, it's a problem that can only be fixed by persuading countries that they now have large enough reserves and they have wasted enough in purchasing these assets. And that is primarily a debate between everybody else in the world. Let's be quite clear, everybody else in the world and China. The problem is that China is more powerful than everybody else in the world on this topic. And therefore, this is also a waste of time. So the conclusion is it's an incredibly interesting, fascinating, intellectually intriguing discussion, but it's a waste of time.
Yes. Well, ladies and gentlemen, you've heard from one of the most eminent commentators in the world the news that the world's best-known business newspaper simply wastes your time every day because it writes a great deal about these things. And it seems to sell newspapers, but it seems to go very well.
We report what policymakers talk about, however bright or not bright it may be.
But if I may just correct you, there's actually one small statistic that I think, with respect, you got wrong. I think actually sterling is now more important than the yen in terms of world monetary reserves, which is strange but true, that the diversification has gone so far that even sterling has almost coming...
Have to check that.
We'll have to check. Well, there's a pint of beer on this,
I don't
Martin.
always agree with you.
No, well, sometimes I disagree with you. But anyway, just going back to this issue, Gita, about the inflows. Martin made the point about the private sector of the world putting money into the emerging markets, partly because they do think that that peg, that fixed rate system which Martin was talking about, will break. There's a lot of speculative money going into the renminbi on the assumption that sooner or later the Chinese will do exactly what the Germans did in the end of the 1950s and the early 1960s, i.e. Let the currency appreciate in the interest of quelling inflation. And there seems to be quite a lot of money piling up in different countries to break those pegs, which of course could be very disruptive and very inflationary. We've had then capital controls now being reintroduced. The IMF got it totally wrong on capital controls, I think, during the Asian crisis, and only recently have we seen some signs of greater humility by the IMF. All this is leading up to the idea of whether the emerging markets should have a greater role in the world's monetary policeman of the International Monetary Fund. You know, can you get back to this power issue about, you know, trying to get a handle on this question of, you seem to have de facto financial power because you've got the reserves, the money is flowing in your direction. Do you have, or indeed, do you want to have de jure international financial power?
Well, let's talk about China. I think it depends on the degree to which China will be able to move the pendulum from one end to the other. And China, from a structural standpoint, is different from that of India and Indonesia. India and Indonesia consume a lot, just like the Americans. You know, about 60 to 70% of their economies are based on domestic consumption, whereas China is the other way around. So China's challenge going forward is to try to move their pendulum from an investment export-centric economy to a consumption-centric economy. But it may sound counterintuitive. I was sharing this with Martin earlier. You know, if you're already eating 3 bowls of rice, it's easier to go down to 2 bowls of rice a day, as opposed to going up to 6 bowls of rice a day. So if you expect China to increase domestic demand in a relatively short period of time, that ain't going to happen. It will take many, many years for that to happen. So I think it will, you know, as much as China sits on top of $3 trillion worth of reserves, if they can't get their act together in moving the pendulum from one end to the other at a fast enough pace, it will make the investment thesis less attractive than it has ever been the past 10, 20 years. Indonesia and India, I think, have a slightly less difficult problem. If we're already eating 3 bowls of rice, it's definitely a lot easier to eat 2 bowls of rice. It may sound counterintuitive, but I've tried it. You can try it. It's how we can move from 30%, you know, export orientation to perhaps 40, 50% or even more. We don't know where the equilibrium is. But I think until then, Indonesia and India will go through a pretty significant repricing of risks, and that will serve as a pretty attractive, you know, investment thesis. And I think more and more money will continue flowing.
And in fact, you are doing this through increasing trade integration, aren't you, within
Yes.
the ASEAN bloc, which is a very sensible way of doing it, I would say. I'd like us to talk about the euro just for a moment, because, Martin, you've given the framework, because you said that the world is split up into fixed rates and floating rate blocks. But, of course, within the euro, it's like a Russian doll, isn't it? Like a mystery wrapped up in an enigma. We've got a floating rate system with a fixed rate component. We've abolished currencies in Europe. We hated those floating currencies so much we just got rid of them. We've not fixed currencies, we've got rid of them. So, as people like you often say, we can't go back to what we used to have. On the other hand, you've said yourself that you think the whole thing is heading for the rocks, and you've recently declared in a statement of great significance that Greece will have to restructure its debts, which I think most people on the private markets do think. Now, given the fact that we're all in a worldwide competition for funds, and there are people from other rich emerging countries who are thinking about investment in Europe, it doesn't do much good for our image, shall we say, in India or China or Indonesia when we have this enormous crisis. I know it wouldn't sell newspapers if this crisis suddenly came to an end, but can you just sketch out how you think the euro crisis will, if not come to an end, at least come to some sort of plateau?
How many hours do we have?
Well, people are very patient in
Okay,
Switzerland.
no, I'll try and... first of all, the big point is the world is, I'm sure, very happy to put money into those parts of Europe that don't need it. The problem effectively is there are some parts of the European economy that after the crisis are no longer places into which foreign capital is going, either into the public sector or the private sector, so they are going through an enormous adjustment. If you left it entirely to the market, there would have just been a series of bankruptcies, sovereign and private. That's what would have happened. In fact, they would have looked rather like Indonesia after '97. And Gita described exactly what happened in Indonesia, and that's what would have happened to countries all around Europe. And since they didn't have a currency to adjust, it would have been a bigger bankruptcy. The decision of the European governments is that that must be prevented. And so long as the problem is limited to the main countries we know about, it can be prevented forever. So what I argued in my column, it's very, very straightforward, is there is a simple binary choice in a sense. You allow defaults to happen, or you finance these countries for the indefinite future, which, as I said, is not forever, but it could be for a very long time. I suspect, since you asked the question what I think will happen, I suspect the European governments will decide to finance them forever. And therefore we are going to have a new package, followed by a new package, followed by a new package, and perhaps people will even get used to it. On the other hand, of course, that's a politically difficult process, and maybe at some point it will break. But it's clear, my guess will be, if we look at the newspaper in a day or two or three, after Christine Lagarde's meetings and other such meetings, we will find a new package, and the money is rolled over. Maybe there's a little bit of maturity extension for the private sector, but there will be no significant haircuts. That may be wrong, but that's my guess. And the reason for that is as soon as there are significant haircuts for one country, there is terror that it will occur for a whole range of countries, and it worsens the panic. So I think that's where you're stuck. Now, what's the underlying problem, apart from all the mistakes of the past, is the underlying problem is exactly what happens in a fixed rate system when you have massive competitive disequilibria. There has to be an alternative adjustment mechanism, and the adjustment mechanism in a fixed currency system is depression. That's how you adjust, and that's what's going to happen.
Well, it's interesting that we've been speaking about current account imbalances, but of course within Europe there's many countries, Switzerland is one of them, but Germany and Netherlands, and there's about 8 or 9 countries that have had very solid current account surpluses now for 8 or 9 years. So we've got the same sort of disequilibria that we've been speaking about on the world scale in the European scale.
Why Switzerland has such an impressively strong currency, and why they can't complain about its pricing, in my humble opinion.
Well, also, if what you say...
the market at work.
I mean, if what you say is right, Martin, it could well be that the Germans in particular are going to be asked to put their hands in their pocket really for the foreseeable future. That would explain why a lot more well-heeled Germans will be finding it very attractive to come and live down here, I think, in coming years. This will be a great boost to the supply side of the Swiss economy and will also bring tremendously increased amounts of German assets into Switzerland. But we're supposed to be sitting here, Gita, learning from each other. And as I said before, and I think we all agree, Asia did do its homework very well. We're perhaps not very good at learning from Asia, we Europeans. You know, we still think we're the center of the world, which we're clearly not. I want to get back to this issue, which you've been very modestly skirting around. Or maybe it's just that power doesn't interest you. It could be that. But is there anything at all that you can learn from Europe, either positive or negative, shall we say, over the last 20 years? Because I think we can learn a lot from Asia, and maybe we should be looking there more. But what can you, honestly speaking, learn from us? Apart from the usual jokes about cuckoo clocks.
This could be a very short answer.
And I'm putting you on the spot now.
Look, I can speak as an Indonesian, okay? How Indonesia could learn from Europe. I think Europe has tremendous innovative educational capacity and infrastructure. and it has gone through phases of manufacturing, prowess or supremacies that perhaps the Japanese, the Koreans, and the Chinese have learned, and that's certainly something that we can learn from Indonesia. I want to do a bit of promotion for Indonesia here.
That's allowed.
We have only produced 14,000 PhDs. There is only 14,000 Indonesian PhDs kicking and alive. As
There's that
compared
many
to
coming out of China every week, I guess.
China has 500,000. Give and take, India has 500,000, and India is producing 1 million engineers and 500,000 doctors per year. We don't do that kind of a scale. And if we don't do that, I think we're going to be just exporting coal, oil, gas, copper, gold, cocoa, and palm oil.
Well, it's not bad to be going on with, is it? But maybe a little bit more for what you do after lunch.
Not bad, but I don't want my kids to be stupid.
Yeah.
I want my kids to be able to, hopefully in the next 10 to 20 years, some Steve Jobs would be born out of Borneo or Papua or whatever. That's really the aspiration for some of the young Indonesians who have decided to join the government and take a massive pay cut.
You count yourself as one of these young Indonesians.
That is happening in Indonesia, and I think we're learning not just from the Europeans, but we're learning from the Indians and the Japanese and the Koreans and the Chinese, and that would be my observation.
G20, this is take a very long time to say, but the G20 was a very significant body during the crisis, and the shift to the G20 is, I think, a very important symbolic event, despite the fact that it's pretty unwieldy. The second point, investment. Is investment shifting? I think that was the question here. That's a really long story, but I think the short answer to that, at least as far as the developed world is concerned, is no. And the main reason for that is that the dominant story on investment in the developed world during the crisis, and it remains the case today, is that it's fallen. That it's just, there isn't much. It's not that there isn't any, it's beginning to pick up now at last, but it's a very lagged effect of the crisis. It lasts a long time. Most Western non-financial corporates are sitting on fantastically large piles of cash, and it will be very interesting to see where they invest. I am reasonably sure that the sort of pattern of investment we saw before the crisis in shopping malls and all that stuff will not recur. But how dramatically different will be from the past, it will be fascinating to see. In the developing world, the emerging world, the pattern shift is clearly ongoing, very interesting, but I think it's just part of the development process. Trade. I'm one of the many people, who tend to think that using trade as a political weapon is quite difficult and dangerous and usually unsuccessful. There's been a long-term policy in the West to try and promote trade with most countries, there are obviously exceptions, in the view that that will support development, growth, create a middle class, and in the long run lead to transformation of societies. And I believe that still, that basic logic holds. So I have, within reason, there are obviously reasons, no real problem at all with continuing to trade with governments that are very different from our own. You mentioned the specific question of resources. Well, I'm afraid as long as we have the hunger for oil that we have, we're going to go on buying oil from countries that have it.
Gita, would you like to respond to maybe just a couple of the points there?
I agree with Martin on the first question in terms of the fact that I don't think we can afford to be interventionist, as the G20 bloc, in the context of what happened in Japan. Clearly, because of some of the stuff I've explained earlier and some of the stuff that Martin has explained. But I want to just raise one point about the Fukushima, tragic event. I think, what we all have to be very concerned with is the disruption of the global supply chain, and that I think on a negative side, I think has affected adversely on businesses all around the world. But I think on a more positive note, it will precipitate a reinvesting cycle, not just in Japan, but hopefully in other parts of Asia, including China, India, and ASEAN, or the Southeast Asia. You've seen the McKinsey study just for purposes of, infrastructure development in the next decade. Asia Pacific has to get about $7 to $8 trillion worth of investments in its infrastructure. So that, I think, will be a big boost to Asia Pacific from an investment standpoint. Now, on the second question, FDI is forecasted to grow by 20%, global FDI this year. And that number is supposed to be $1.5 trillion US dollars this year. But we all know statistically in the past many, many decades, good chunk of that is going still to the developed markets. At least 80% of that amount is going to the developed markets. So the non-developed market, as a beneficiary of this big 1.5 trillion US dollars, will have to tinker with, whatever they can sell. And it usually boils down to the natural resource. But I think there is a bonus in recent months in that some of the more emerging countries, Indonesia, India, we can afford to sort of like climb up the value chain and create a new investment roadmap as to not just get on with the natural resource. So it's already happening in Indonesia. Indonesia's investment rose by an unprecedented level. We went up by close to 60% last year from the year before. And first quarter result was also quite staggering at 28% rise year on year. The money is coming. I'm not too worried about whether or not there's money, but I'm more worried about whether or not we can address some of the more fundamental issues such as corruption, the bureaucratic dead weight and all that. But I am quite comfortable if I take a 10 to 20 year view, and that the young, youthful population of Indonesia, I think, will take a good view of what needs to be done.
No, well, thank you very much. And I just would like to respond myself to that question about whether investments are moving into, as you say, more long-term investments. From where I sit, I see a lot of interest also by Singapore, by other states in Asia, very large assets, putting money into exactly what you've identified, Gita, as the high-technology, innovative businesses here in Europe.
I just want to add, David, the UK out of nowhere became the second largest foreign investor in Indonesia. The US came out of nowhere. They were number 23 in 2009. They were number 3 last year. So I think money is moving, and it doesn't take a lot to move a country like Indonesia in terms of FDI.
I don't see a forest of hands, and I think we've had a very good discussion up here. So I'm going to just close the discussion just with one final point to our two panelists, and it is about China, and I apologize for stressing China, Gita, because you've told us that there are other countries in Asia apart from China, but China, of course, is uniquely fascinating. First of all, with you, Martin, this $3 trillion of reserves, which seems to be a bit of a mistake, do you actually see any sign, any possibility that as China slowly goes towards a consumption economy, and also, as Gita says, they do have a demographic problem, they have a pension problem, do you think that we've now seen the high point and that they're going to draw down on these reserves, also as they let the renminbi rise? I mean, I know it's always very awkward to stick your neck out, but you do it all the time, and when you're right, you remind people that you were right, and when you were wrong, people tend to forget. So here's your big chance of making a big forecast.
And when I'm wrong, they remind me. I think my forecast is we have not seen the peak. Certainly not, but the rate of increase is slowing. So I think it's very plausible that we're not going to see 6 trillion. But the China is doomed to continue to accumulate reserves for some time further. But I think it's very clear that the Chinese government has decided, very clear, that it wants to stop this process and it wants to rebalance the economy. But I agree absolutely and completely with what's said by Gita earlier, and I said that earlier. This is a long-term and slow adjustment process which will probably take it up to a decade or so.
And Gita, the question for you, it's the old chestnut of whether you can actually get the alignment between the political liberalization and the market liberalization. Many people think that accidents will happen in China. They always do. What is your prediction of what sort of political system we'll have in China in 10 years?
China is on a very, very strong footing. But I go by, my buddies, my lawyer and banker buddies, each of which, has 7 to 10 properties in China, most of which are uninhabited. And that is exactly what I saw in Bangkok in '96, what I saw in Jakarta in '97, just before what happened. And, go back to the rice bowl anecdote. you know, if you're already eating 3 bowls of rice, and if I ask you to eat 6, not easy. So I think it's going to take time, and they have to go through some kind of a correction. I don't think it's going to be by virtue of an actual supreme collapse, but you know, there has to be some corrective mode.
Well, if they're Goldman Sachs, and I believe you are connected with Goldman Sachs, they're probably still telling their clients to buy real estate when, in fact, they've put a lot of put options on all those apartments. I would imagine that is the story. So you heard it here first. Ladies and gentlemen, it's been a huge shame that we haven't had Christine Lagarde up here. I mean, I would have just been sitting here just totally mesmerized under her spell, had that been the case. It's been a great deal more boring to have just 3 gentlemen here speaking to you. I do apologize for that. At least we've had Guitar here to liven it up. The other 2 of us, I used to work on the Financial Times. Martin still does. Talk about diversity, you know, can't you do better than that? But anyway, it's been very good fun discussing up here, and I do hope you've half enjoyed it as well.